G'day everyone, welcome back to Pete's Investing. Today is June 18, 2023. This is the British pound US dollar currency update. On our weekly and daily, we're in a bullish momentum. Just be careful though, we've got a potential bearish divergence playing out, even though we're making new highs. So let me discuss first off the trends. We'll look at the triple moving average of the price chart. It's aligned with long positions on the moving averages of the CCI 150. That's giving us this bullish signal. Likewise on the daily, a bullish signal, and it's broken through this previous resistance at 126.79, and it's making new highs. So we'll keep an eye on that. Now if I zoom out, let me go back to the weekly for a moment. If I zoom out, you can see there, it's actually broken up between that low and that high. It's actually broken up through the 61%. So that's a big positive in terms of potential further upside, although we obviously may see some further retraces before taking further upside on this. Of course, there's no guarantee it's going to continue up, but that's usually an area to look out for. If it breaks through the 61% Fibonacci, that's usually an area to move forward in that same direction. On the hourly though, we did have a bearish divergence on the CCI before on our last video with this bullish divergence on the price chart, and since our last video it's broken with new price highs on the price chart. But notice also there's new CCI highs, but you will notice if I maximize that, if we move that to that recent high, that's still a bearish divergence. So what we want to look out for is, and if we move, let me get rid of this channel, if we move that, let me get rid of also this Fibonacci. So if we move that to that high there, you can see there new highs on the price chart and new lows on the CCI. So as long as that remains the case, we're going to keep this as a potential reversal at some point, or at least a retrace at some point. Now, just a bit of history going back here. You can see here, historically, there was the CCI broke down. You see there, if you track that against the highs and lows of the price chart, and that would have been the highest point there on the CCI versus the price chart. You can see there that played out as well, and it eventually broke down. So long as the CCI keeps tracking down and the price chart keeps tracking up, we're going to continue using that as a potential reversal, albeit maybe a retrace. And you can see there it actually retraced back down, and had you gone short once the breakout in across the channel there, let me just draw the channel just for reference. If I'd have drawn between that divergence range, the lowest candle, once it broke out there, then you would have, let's go back and draw a Fibonacci. At a recent low, I would go back to probably that recent low there to that high. So once it broke out within that, I'd take the next target area. Once it broke below that channel, then the target area would have been that Fibonacci level there. And I'll take it to 2 Fibonacci levels. You can see there it hit the target and actually went further than the target area. So that's possibly a possibility of what might happen with this little divergence playing out now. So for this to fail, we need to see new highs on the CCI breaking higher than that point there. As well, we need to see continuation of new highs on the price chart for this to fail. So as long as the CCI keeps trending down, we're going to keep tracking that as a potential reversal. So this could still go higher in terms of the price, but as long as it keeps going down on the CCI, that's still in play. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page. We also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.